Okay, and then yeah, now this is a little sneak peek of what we're gonna do. And then the final thing we take into consideration is timing. Okay, the next thing will be timing. So like I showed you, 8 a.m. London time or 1:30 p.m. my time. This was before daylight savings time. So this move could happen either during the London kill zone or London open. Okay, so it could happen like you know what the kill zone is, right? That's basically the Frankfurt session. Okay, so we're only focusing on the Frankfurt session and the London setup more. So this will be a very consistent setup. Let's talk about that later. Okay, so look at this. So this is the London kill zone right here.
Are you starting from
And
7 o'clock to 10 o'clock for the
yeah,
Q?
7 a.m. Yeah, 7 a.m. is when London kill zone opens. This was on this was February actually before daylight savings time. I'll give you the times that I use right now. Okay, I'll show you. So if I
Okay.
set it to London time, that's London. Let me see. There we go. Yeah, see, 7 a.m., 8 a.m. So what happens? Let's play price forward. And the next thing we're gonna do is we're gonna sell it. Stop loss above the strong high. See that 3.7 pips. And then we will be targeting external range liquidity. Okay, external range liquidity. I'll show you about this. So what happens? Not yet, not yet. There we go. Time is good. There it goes. Right at 7 a.m. Okay, right at 7 a.m. London kill zone clears out this pool of liquid, the previous day's high, Asian high, all of that cleared out into the strong high. Okay, into the strong high. And then what happens? There comes the drop. Okay, there comes the drop. That's it. Okay, so this is a very consistent setup. I'll show this to you later. So you can see what happened, right? Liquidity grabbed into the strong high time frame point of interest, timing. So those are the only things we take into consideration. Okay, so there you go. Taps, and then it starts to drop. Okay, then it starts to drop. So that same way. Now, what happens after this stop hunt and this breakout structure? Another strong high gets created, right? Another strong high gets created right here. This will be another strong high because it has cleared out this liquidity
Yeah.
and it has broken structure. So this turns into a strong high. So once a strong high is created, what do? We go into the higher time frames to see what our point of interest is. So what do we have on the daily? Another rejection block, right? We have an order block. Second, we have a rejection block. Okay, so how are we going to confirm which one is going to hold? Okay, now when there are two POIs, I prefer always waiting for confirmations from one of those zones, either one of those zones, or else maybe timing will be a nice factor. Okay, if timing will be a nice factor. So look at this once again. Let's see at what time price is tapping into these areas. Not yet. There we go. The liquidity below it. Can you see that? Liquidity
Yeah.
below the POI. Okay, liquidity building up. I think that's the Asian high. And there it goes. Taps. Yeah. This is it to London time. Look at this once again. 7 a.m. See that? Right at 7 a.m. taps into that and then it starts to drop. Okay, so let's talk about the timing factor later.
Okay.
Sorry.
Yeah.
Yeah, let's talk about the timing factor later. But yeah, that is what happens. See, taps right into it and then it starts to drop. Okay, then it starts to drop. So that's another rejection block. Let me show you more examples because it's very important. Let me show you. Where else do we have there? Yeah, look at this one. Yeah, this was very clean. Where did this one tap into? Where did this one tap into? Right into this one. Okay, why? Why did it tap into this? That's the main thing. Liquidity above it. See that? Liquidity above it. And also, if you use a line chart, you'll see how this low right here is a strong low. See that? Stop
Yeah.
hunt, breakout structure, strong low, liquidity, timing, there it goes. Okay, so that's the only setup we're gonna see. And also now, if you drop into lower time frames, look at this. This right here is a major trap. We can call it a major trap or whatever if you want to call it. Look at this. Higher highs, higher lows, higher highs. What will everyone expect? A higher low to form somewhere around here and a higher high, right? This is what everyone is expecting because why? The structure is bullish. Okay, so now maybe some people are waiting. Yeah, there we go. Supply zones, right? Order blocks. Buy it from here. Everyone's buying it here. Now look at this. This is why I told you price is fractal and it's just the closing price we're going to focus on. But once we switch time frames, you'll get a different view. Now on the 4-hour time frame, this is only a week, right? This is only a week. But if you go to 30-minute, what is that? An order block.
An order block.
See that? Yeah. On the 30-minute, it is an order block, a full-bodied clear one. And yeah, you can even refine it to this 50-minute rejection block that is in here. See that? The tiny one. Like I'm not going to do huge refinements. I'm not going to take this 4-hour rejection block and then move it all the way down here. No, that's too much. Just a slight refinement. Okay, just a slight refinement. So you can buy it with your stop loss below the 50-minute rejection block. So what happens? Okay, there it comes down, clears out all of this liquidity. Okay, so everyone that wanted to buy here, look at the reaction from that though. Why? getting everyone hyped up. More and more buyers are getting in, chasing this move. Okay, so with this rejection, more and more buyers are getting in. But what happens? It taps and then it starts to fly. Like first, what they do is they clear out all of this liquidity. They induce all of those sellers into the market and then they go up. Okay, so that is what happened there. Okay, so yeah, let me show you. Let me show you some more. Same exact setup again and again. Okay, so let's see. Yeah, look at this one. This was very clean. Yeah, look at this liquidity. You can see this, right? Equal highs.
Yeah.
Okay, equal highs. Like, are we gonna go into lower time frames and then look for POI in here and then sell it? No, right? We're gonna look for we're gonna wait for this to get taken out. Okay, we'll be waiting for this pool of liquid to get taken out. Okay, that is what we are waiting for. Okay, so now look at this. Now, what if we do this? Oh, liquidity, rejection block, sell it, stop loss above the rejection block. What if we do something like this? What happens? Stopped out. Why? Okay, because remember, once we spot the liquidity, we're not just gonna like for the sake of it being a very clear one, we're not gonna use this. Okay, we will always go into the higher time frames to pick our POIs because most people what they do is once they like when they start picking up POIs, they'll just go into the 1 minute first. Why? To get tight stop losses. No, that's wrong. Okay, to like once you spot the liquidity, you have to go into the highest time frame you have to pick your point of interest. Okay, let's talk about that later. But look at this one now. We have this pool of liquid, but on the 4-hour time frame, what do we have? Rejection block in here, right? So now, which one are you going to trust? Okay, which one are you going to trust? Like a random 1-hour rejection block or is the 4-hour? Obviously, the 4-hour, right? The 4-hour is stronger. Okay, so what we do is once we spot the liquidity, we're going to go into the closest higher time frame point of interest, the closest highest time frame point of interest. Like there are times when we will be able to take like intraday trades from the monthly time frame. Okay, I'll show that to you later. Okay, but yeah, this is what happens. So now we have liquidity and this pool of liquid. So what happens? There it goes right into this. Okay, but also remember now, your exits are more important than entries. Okay, anybody can get sniper entries. Anyone can get that, but where are you going to pay yourself? Okay, so that is what's going to determine if you're going to be profitable or not. Because why did I tell you that? Now look at this. With this liquidity grab, okay, with this stop hunt, this candle also closed above these highs. Can you see it? It has closed above these highs. So which means, like once again, since it has closed above these swing highs, this low will turn into a strong low. Yeah, it has turned into a strong low. So now if I take a sell here, can I directly target the strong low? No. Okay, it might be a reversal zone, right? So what we do is we'll have to have safe targets. Now look at this once again. This 4-hour rejection block was a 1-hour order block. See, that same exact thing. Okay, same exact thing. And so what do we have in here? Equal lows. Okay, liquidity. And on this strong low, what's the point of interest you have? Rejection block once again. Okay, so I did not take the sell. I only took the buy. Look at this. So we can buy it right here. We can have our stop loss below the strong low. Okay, we can have the stop loss below the strong low. Look at 3.7 pips. Okay, 3.7 pips. And what happens? There comes the drop. Okay, there comes the drop right into this one. Okay, right into this one. But look at this now. Now, once again, can you see how the bearish candle closed below these lows? Use a line chart. You can see how that high turned into a strong high. Can you see that? Once again, it turned into a strong high. So if I'm taking a buy here, can I target the strong high? No, right? That's wrong. That is wrong once again. Okay, so now we know that, yeah, the cells are already in charge because why? Once again, the major breakout structure is bearish. Okay, and the counter trend is also turning bearish in these areas now. Okay, so which means they are going to drop into the external range liquidity. So the buy that we're going to take is, yeah, it is a risky one, but because it's not in line with the current market direction. But what happens? There it goes. Look at that. Like that's enough, right? That's more than enough. That precision is more than enough because you don't have to go into the lower time frames. You only have 3.7 pips. Okay, you only have 3.7 pips from the 4-hour time frame itself. Okay, now, yeah, I did not take the next sell, but yeah, since this high IT is a strong high, we can still expect this rejection block to hold. Okay, but why didn't I take this? Because no liquidity below it. Can you see that? No liquidity below it. So not a very high probability point of interest. But what happened? There it goes. Taps, starts to drop. Okay, starts to drop. So that's it. Okay, that is why, yeah, I only managed to take the buy. Look at this. You can see how clean that is, right? So that's more than enough. Okay, that is more than enough. So if you risk 1%, you have 16%. I don't risk 1%, but yeah. Okay, so that's that. Let me show you some more. And yeah, like I'm not gonna tell you this Rejection blocks are always going to give you that tap and run setup. Okay, no, sometimes you will take losses, sometimes you'll be in drawdowns, but as long as you know how to manage your risk, you don't have to worry about any of that. Because see, in here, of course, you would have got stopped out for sure because he didn't give you that sniper entry, but eventually never went above that high. Why didn't it go above that high? Because it's a strong high. Liquidity taken, structure broken, liquidity below it, and there it goes. Okay, so it didn't give you the sniper entry, but yeah, eventually it dropped. Okay, so let's see some more. Yeah, see, even this one that it tap into right into this. Okay, right into this. Yeah, look at this one. This was FOMC actually. First thing, what is this low doing here? This is a strong low, right? Why is it a strong low? Because liquidity taken off from a swing low, and then structure is broken, not with the wicks, but once you got this body closing. See that? Once you got this body closing, we know that this turns into a strong low. Or use a line chart, you see it very clearly. Okay, you see the formation very clearly. Okay, now look at this. Now this day we have FOMC coming. Okay, so you know what FOMC is? It's high impact news. Okay, so now look what they're doing. They're getting, this is how they're getting prepared for news since 5 long days. What are they doing? Filling up all of these equal lows. Not only that, look how many people are getting trapped. Okay, so much of liquidity. Okay, so much liquid build up. So are we gonna sell here? No. Are we gonna buy here? No. We're gonna wait for both of that to get taken out. So now, since we know it's a strong low, we know that, yeah, news will push it higher, right? Now, this is internal range liquidity. So outside of this will be the external range liquidity. Let's talk about that later. So below the pool of liquidity, what can you look for? A higher time frame point of interest. Now, if I go to the 4 hour, what do we have? Oh, we have many. Why? We have an order block, first thing. Then we get a rejection block. And we have another one in here. So are we going to buy from all 3 of them? No, right? Like at the time you're getting the right trade, your account will be blown. Okay, so now what we do is now, see, once you go into the higher time frames, the guesswork is over. Go to the daily. What do we have? Just one rejection block. See that? Okay, so that's the thing. Once you go into the higher time frames, the guesswork is over. There we go. So now both of the other zones are irrelevant. Okay, because why? The daily is stronger than any of that, right? The daily is anyway stronger than the 4 hour. And then what you could do is, if you want to, you can then refine this into lower time frames. So yeah, I did a slight refinement of this into this one. See, not huge refinements. The original POI was here. I'm moving it here. Okay, like not huge refinement, just a slight refinement like this. And then look at this now, 11:30 p.m. my time. Sorry?
Is that a breakup block?
That's not a breaker. That is also a rejection block on the 1 hour time frames. Yeah, that's another rejection block. This is a breaker. This right here is a breaker, but this is a rejection block. Okay, that's a rejection block once again. Yeah, so let's see. Now see at 11:30 p.m. my time, that is when FOMC comes. So let's see what they're doing. Look at that. How many more are getting in, right? So many. Okay, with this right here, like what if you take this to be a strong high, stop on breakout structure? Once again, you're trapped. Okay, once again, you're trapped. So let's see what's gonna happen. There it comes. Right at 11:30. Taps, clears out the pool of liquidity, and then it goes in search of the next pool of liquidity. Why? First, they took out the sell stops, and then they go into the buy stops. Okay, so where are the buy stops? Above, sorry, above all the swing high. So there it goes. You buy at internal range liquidity, and then you exit at external range liquidity. Okay, so enter at internal range, exit at external range. Okay, so a very clean setup. You understand that, right? So that is also from the daily. I'll show you how to do the multi-time frame analysis later, how I do that. Okay, so let's see. Sorry. Yeah, look at this one. Even this tapped right into this. Okay, so these are opening prices. Once again, opening price. Now, where do you think this tapped into? Let me show you. See, same exact thing. Okay, same exact thing. What is this? A strong high on the H1. Liquidity taken out. Swing low broken. Right? Swing low is broken. So this turns into a strong high. So like I told you, what do you do? Like once we find out a strong high, we go into the higher time frames to see what our point of interest is. Now on the 4 hour, it's not that clear. Okay, it's not that clear. So what do? Go to the daily. So what do we have on the daily? Yeah, there you go. You can see already what it is. We have the rejection block. See that? We have the rejection block on the daily on that H1 strong high. Okay, we have that one. And then now if we go back to the H1, what do we have below it? Liquidity, a swing high. Okay, strong high, higher time frame point of interest, liquidity below it. You can sell it like this. Stop loss can go above these highs, around 5 pips. See, if you can place it above these wicks. Remember, the safe place for the stop loss is above the strong high though, but yeah, I know it's too much. So you can have it above these wicks right here. And then you can target, once again, the external range liquid that is getting created all the way down here. Okay, so yeah, if I remember, this did not tap on trading view, but if you factor in the spreads, you'll always get tapped in. There it goes. Yeah, taps, and then it starts to drop. See that? Once again, higher time frames. Okay, so higher time frame POIs are very important. You know, the thing is, if we mark out a zone like this, do you think anyone will have an idea what this is? No, right? Just
Yeah.
some random wick. Okay, just a random wick. But like I told you, it's very important. Okay, like you'll have to always pick your POIs from the higher time frame because they don't actually care about the lower time frames. Okay, all they care about is the higher time frame. So we'll have to always understand that. Okay, so yeah, see, even this tapped into this. Even this tapped into this rejection block, but didn't give you that sniper entry. I got stopped out in here because a huge drawdown, 26 pips. Because anyway, I'm not gonna have a 26 pip stop loss above that high. Okay, so yeah. Yeah, look at the position from this. See, right into this. Taps, starts to drop. Okay, starts to drop. Let me show you. Yeah, this right here. In here, of course, the setups were very clean, very clean. Yeah, this was the previous range we had. This was the past week. And yeah, these setups, let me show you. Okay, like we had some very beautiful setups this week. Let me show you that later. Okay, but yeah. So now if you get back into this example, now you can understand this, right? Once we spot this liquidity, we go into the highest time frame we have to see if we have a closing price above it. So what is it? It could be an order block, a breaker block, or else a rejection block, and sometimes an imbalance. Okay, not all the time. I'll show you when imbalances work, but not all the time. Okay, so can you understand this so far? I hope it's clear. Okay, yeah. Now what could happen is, next the market might give you a retracement. Once it gets here, yeah, it might give you nice moves. Why? Because there are people who wanted to sell it here, right? Now, some people have already gotten in. Like now the market is going down, so you might get these lower time frame breaks and all of that. So once you get that lower time frame break, another set of traders will be expecting a move like this, right? A retracement back into that lower time frame block that was newly created, and then the drop. So what they would do is once it goes back up, they'll sell it, stop loss above that newly created high, and they'll target lower prices once again. So that way they can increase the risk to reward, right? So this is what the majority of the traders would do. We know that. Okay, this is what the majority of the traders would do. But what happens now? When enough sellers have gotten into this market, smart money will step in and then they'll start placing buy orders, right? They'll start placing buy orders. Why? To take out everyone that wanted to sell here. So now all of the stop losses are taken out, right? All of these stop losses are taken out.
Yeah.
And then what happens? Okay, then what happens now? This right here was not just a removal of the sellers. What else did they do? Now, if you look at market structure, what was price doing? Creating lower highs and lower lows, right? But now all of a sudden you have a move like this. What would people assume? Oh, that's a bullish breakout structure. Okay, so now let's look for order blocks in here, demand zones in here, pull out our Fibonacci's from here to here, enter from the golden ratio and all of that. But where are the stop losses placed right now? Below that low, right? Because why? They want to buy it here. Okay, they want to buy it here. So if you consider this to be a bullish breakout structure, there we go. Okay, that is the inducement. Okay, so that is not actually a breakout structure. It was only a sweep of internal range liquidity. Okay, so once we go into ranges, once again, you'll understand that the range we had was from here to here. So this right here was only internal range liquidity. It is not a valid bullish breakout structure. Okay, it was only a sweep of internal range liquidity. So now what happens? All the sellers gets taken out. Now buyers are induced into the market in the form of buy stops. See, that's the buy stops that were above this high. It is now activated. And now some traders will think, okay, we have a bullish break. They start marking out order blocks here, demand zones here, or else they'll try to pull out their Fibonacci's from here to here. They'll do all of that stuff. But now where are the stop losses placed? Right below that low. Right? This is where the stop losses are now because everyone wants to. Now, most of the traders are buying this market. So what happens? Quickly comes back down, might get into this area and give you little moves. So that way more and more buyers are getting in and eventually this is what happens. Okay, this is what happens. So the safest place for you to enter is above the pool of liquidity from the higher time frame point of interest like this. Okay, and also the safe place for the stop loss is always above the strong high. Okay, the safe place for your stop loss is above the strong high. But yeah, if you do not like the risk to reward ratio, if the stop loss is too big, you can have it above the point of interest, and then we can target external range liquidity. Okay, we can target external range liquidity. So that is how it goes. So yeah, now like I recommend you do this until you find consistency with this, because now once we do this, yeah, there are times when price wicks out, like wicks us out of the trade, and then it goes in our direction. So that happens sometimes, but yeah, like this is what I do. Okay, this is what I